Welcome to the deep dive. You send us the sources, and we dig in and pull out what you need to know.
That's the plan.
Today, we're looking at GSK's first quarter 2025 results. And specifically, we're trying to view this through an investor's lens.
Right, thinking about what these numbers might signal for the company's direction.
Exactly. Now, really important disclaimer up front. This isn't financial advice. It's purely for informational purposes.
Definitely. Always do your own homework.
We've gone through the Q1 report, the details, and our mission here is to just highlight the major points from GSK's start to 2025 and maybe what they could mean if you're looking at GSK as an investment.
Sounds good.
And just before we jump in, if you want to stay sharp on AI specifically for the pharma world, please do subscribe to Pharma AI Academy right here. It supports the channel, and you get some really valuable training.
Good plug. Okay, so Q1 2025 for GSK.
Let's get into it. The big picture first.
Yeah, let's start there. Overall financials, turnover hit $7,516 million. Now, that's up 2% at actual exchange rates, AER, but 4% at constant exchange rates, or CER.
Okay, so underlying growth is a bit stronger once you strip out currency effects.
Exactly, which is important for a global company like GSK.
Yeah.
But the really eye-catching number is total operating profit.
Right, that jumped quite a bit.
Huge jump, up 49% ER and 50% CER. That brings it to $2,216 million.
Wow, okay. 50% growth in operating profit. What's driving that kind of increase? Is it just higher sales or...
It's a mix of things, it seems. The report mentions increased investment in R&D, pushing new products out, focusing on what they call their growth assets.
Oh, okay. So investing for the future, but it's already hitting the profit line now.
Seems like it. Plus, their core operating profit, which smooths out some one-off items, that was also up 4% ER, 5% CER, landing at $2,533 million.
Got it. And what about cash? Investors always like to look at cash flow.
Yeah, good point. Cash generated from operations was strong, over £1 billion. 301 million, actually. That's a 16% increase.
Solid.
And free cash flow, the cash left after running the business and investing, that saw a really big leap. 0.7 billion or 697 million compared to just 289 million this time last year.
That's a significant jump in free cash. Gives them a lot of flexibility, I imagine.
Definitely. For dividends, buybacks, more investment, you name it. And that ties into earnings per share, too.
Right. EPS was up as well.
Mm-hmm. Total EPS climbed 55% ER, 56% ER to 39.7p. And the core EPS figure, the one reflecting underlying profitability, that rose 4% ER and 5% ER to 44.9p.
Okay, so the headline numbers look pretty positive. Where's the strength really coming from within the business segments?
Well, the clear standout is specialty medicines. That division really powered ahead.
Yeah, I saw that. Growth was, 16% ER, 17% ER, reaching almost $3 billion?
Exactly, $2,933 million. And it's quite broad-based within that segment, too.
So not just one blockbuster carrying everything?
Not entirely, no. In HIV, their oral two-drug regimens are doing well, especially Dovato that grew at 19%.
Yeah.
But the really rapid growth is coming from the long-acting injectables.
Things like Cabenuva and Apretude.
Precisely. Cabenuva sales jumped 38%, and Apretude, which is for prevention, pre-EP, that saw a huge 63% increase.
63%. That suggests a real shift towards these longer-acting options.
It really does. More convenience for patients, maybe better adherence. That seems to be a key growth engine for them right now.
Makes sense. What about other areas in specialty medicines?
Also strong. Respiratory, immunology, and inflammation grew 26% ER, 28% CER. Mm-hmm. They call it Nucala, and Benlysta is performing well there.
Okay.
And then oncology, just remarkable growth, 52% ER, 53% CER. Jemperli and Ojjaara, or Amjar, depending on the market, were the big drivers mentioned.
50+% growth in oncology is huge.
It really is. So you've got multiple growth drivers within specialty medicines. It shows that strategic focus on innovative, higher-margin drugs seems to be paying off for investors, reducing reliance maybe on older products.
Okay, so specialty medicines, definitely the star performer. But the flip side was the vaccine segment, right? That's on overall decline.
That's correct. An important point. Vaccines were down 8% ER, 6% ER overall. But it's not a uniform decline across the board.
Huh. So some bright spots in there.
Yes. For instance, their meningitis vaccines, Bexsero and Menveo, they actually showed strong double-digit growth. Bexsero up 20% CER, Menveo up 13% CER.
Interesting.
And they also got FDA approval in Q1 for Penmenvy, which is another meningitis vaccine.
Okay, so meningitis is still a growth area for them within vaccines. What about the bigger names, like Shingrix?
Shingrix sales were down 7% CER. The report points to a few things in the U.S., slower uptake among the remaining unvaccinated population, and some channel inventory effects. Internationally, it was partly due to a tough comparison with a strong Q1 last year, particularly in Australia, though it did grow in Europe.
Right, so a bit complex there. And the RSV vaccine, Arexinavir, that had a big drop.
Yeah, a really significant one, down 57% CER. The main reason cited was the, let's say, more limited recommendation from the ACIP in the U.S.
The Advisory Committee on Immunization Practices.
That's the one. Their initial recommendation for the 60 to 74 age group wasn't as broad as perhaps hoped, which impacted uptake.
Shows how much influence those advisory bodies have, doesn't it?
Absolutely critical for vaccine success. And just quickly, general medicine saw a slight dip too, down 3% CER.
Which is maybe less surprising for more mature products.
Kind of expected in that segment, often facing generic pressures, not usually the main growth engine anyway. But let's shift focus to the future, the pipeline. That's always key for investors.
Patiently. What's cooking in R&D? The report mentions some new approvals and future potential.
Yeah, some positive movement there. In Q1, they got 2 major FDA approvals, Penmenvy, the meningitis vaccine we mentioned, and Bluechupa, a new antibiotic.
Okay, 2 approvals in 1 quarter is pretty good.
It is. Plus, they got positive ACIP recommendations for Penmenvy, and importantly, an expanded recommendation for XV. That could help offset some of that earlier limitation we discussed.
Ah, good news for our XV then. What else is coming down the pike soon?
They're expecting more approvals later in 2025. Nucala for COPD, Blenrep for multiple myeloma, and Depemokimab for severe asthma and nasal polyps.
Okay, several shots on goal this year.
And looking further out, this is quite striking. They've flagged 14 key opportunities they expect to launch between now and 2031. Each one they believe has peak year sales potential over £2 billion.
14 assets, each potentially over £2 billion. That's a lot of potential revenue.
It really is. Significant future growth baked in there if they deliver. They also highlighted positive data for ultra-long-acting HIV regimens and a breakthrough therapy designation for an oncology drug, an antibody-drug conjugate, or ADC, for a type of bone cancer.
ADCs are a hot area in oncology right now.
Very much so. It signals they're pushing forward in key innovative areas. Plus, they plan to start more late-stage pivotal trials this year in respiratory, oncology, and HIV. So, continued investment.
So it looks like a strong commitment to R&D and building that future pipeline. Did they mention any strategic moves like M&A or partnerships?
They did. They completed the acquisition of a company called IDRx that adds a precision oncology therapy to their pipeline.
Okay, bolstering oncology further.
Seems like it. And they also inked a new partnership with ABL Bio, focusing on neurodegenerative diseases, and a research collaboration with the UK Dementia Research Institute.
Interesting, branching out into neurology and dementia research more heavily.
Yeah, it signals they're looking beyond their current strongholds and investing in areas with, a huge unmet need, diversifying the long-term pipeline.
Right, so internal growth, pipeline development, and these strategic external moves. Let's tie this back to the financials again. What's the outlook they're giving investors?
Generally positive. They're guiding for core operating profit growth between 6% and 8% at CER for the full year.
Okay, continuing the growth trajectory.
And they expect leverage, meaning profit should grow faster than sales, basically helped by that shift towards higher margin specialty medicines and cost management. They also bumped up their guidance for royalty income.
Oh, more royalties coming in.
Yeah, now expecting $750, $800 million. And importantly, they said they plan to reinvest that extra income straight back into the pipeline.
Plowing it back into R&D makes sense. And EPS guidance.
Also projected to grow 6% to 8% CER for the core EPS figure.
Okay. What about direct returns to shareholders? Dividends, buybacks?
Good question. They declared a Q1 dividend of 16p per share. That's up from 15p in Q1 last year.
A little increase there.
And they kicked off a pretty substantial share buyback program, £2 billion worth. They plan to complete that by the end of Q2 2026.
$2 billion in buybacks. That, plus the dividend increase, signals a clear commitment to shareholder returns, doesn't it?
Absolutely. Things investors definitely like to see.
Of course, it's never all smooth sailing. What about the risks? What potential headwinds did they highlight?
There are always risks. One is the potential impact of U.S. tariffs on pharma products. There's an ongoing investigation, Section 232. GSK says they have mitigation plans, but it's something to watch.
Right, trade issues are always a possibility.
Currency fluctuations, as always for a UK company reporting in sterling, are another risk factor. And then there are the legal matters.
Ah, yes. Zantac litigation is still ongoing, isn't it?
It is. That remains a significant uncertainty. There are also some intellectual property disputes around mRNA vaccines and RSV, although they did mention settling the RSV patent case with Pfizer recently.
Okay, so Zantac is the big one still hanging over them legally. Any R&D setbacks mentioned?
Yes, unfortunately. Their phase 3 trial for Zejula, called ZEL1L, in a specific type of lung cancer maintenance therapy, didn't meet its primary endpoint.
A reminder that drug development is inherently risky.
Exactly. Not every bet pays off. That Zantac litigation, though, investors really need to keep a close eye on developments there. The potential financial impact could be quite large depending on how it resolves.
Good point. So we've covered financials, growth drivers, pipeline, strategy, outlook, returns, and risks. Any other R&D highlights that might catch an investor's eye for that long-term view?
They did specifically call out continued progress on some key late-stage programs, things like camlipixant for chronic cough, a long-acting TSLP asset for asthma-related conditions, and bepirovirsen for hepatitis B.
Okay, more pipeline depth.
Yeah, and advancements in next-gen long-acting HIV treatments, pushing forward with those oncology ADCs we talked about, and continued investment in vaccine tech like pneumococcal MAPS and mRNA programs. It reinforces that R&D engine theme.
Got it. So if we try and summarize this for an investor, what are the key takeaways from GSK's Q1?
Well, I'd say definitely a strong start to the year financially, really driven by that impressive growth in specialty medicines, HIV, oncology, immunology.
Right, that's the main engine right now.
Yeah. The pipeline looks promising, with near-term approvals expected and that longer-term potential from those 14 key assets. Plus, they're making strategic investments like IDRX.
And returning cash to shareholders.
And returning cash, yeah, through the increased dividend and the big buyback program.
But you need to balance that against the risks.
Exactly. The vaccine segment showed some weakness, particularly Shingrix and Arexvy, though Arexvy might get a boost from the expanded recommendation. You've got potential tariff impacts, currency swings, the ever-present Zantac litigation, and the reality of R&D risk, like that Zejula trial result.
So a picture of solid current performance, clear investment in the future, but with notable risks and areas that need monitoring.
That sums it up pretty well. And again, just to hammer it home, this is our take on the report, not financial advice. Please do your own research.
Absolutely critical. Weigh up the current strengths, the future potential, and those risks carefully. Which leads to maybe a final thought for you listening. How will GSK's ramped up R&D investment and these upcoming launches they're banking on really shape the company's long-term value for investors? Especially when you factor in, changing market dynamics, potential pricing pressures, future regulatory hurdles. It's a complex equation.
Definitely something to ponder.
Yeah.
How well can they execute on that pipeline potential amidst all those external factors?
Exactly. Food for thought. And one last reminder, if you found this valuable, support the channel and get yourself some great pharma-focused AI training by subscribing to Pharma AI Academy right here.
Thanks for tuning in.
Yes, thanks for joining us for this deep dive.